welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to home business owners. And today I want to talk about 10 overlooked tax deductions for home business owners. This is going to be really key for this year because with tax reform, some of this stuff might be going away. All right, so let's go with number one, bank fees. Okay, if you have a business bank account, any fees associated with that bank account is tax deductible. Now, what most people don't know is fees that, like for PayPal, they take a percentage, and different payment processing. So lots of different companies use lots of different, payment processors like an e-wallet or something like that. The fees that you pay for your e-wallet or whatever kind of payment processing that your company uses, those fees are tax deductible. So make sure you add them up and deduct them. Okay. Subscription fees. Okay, and so what I'm particularly talking about is fees that you pay to maintain some things. So for my e-commerce people that have an Amazon store, Amazon charges $39.99 a month for you to have your store. So that fee is tax deductible. If you pay a monthly fee for, an affiliate product that you might be an affiliate for, those fees are tax deductible. So any type of fees that you have to maintain a business product for, those fees are tax deductible. Number three, samples. This is one of those things, especially, for my folks that have a physical product. If you give samples to people, then those fees are tax deductible. Now, with that, you don't just go give your samples all willy-nilly. You need to document the information. You need to have the date, the customer, their email address, phone number, some way that you can contact them, to be able to follow up. But you have to document this in order for your samples to be tax deductible and you be able to substantiate that deduction. And so one of the tips that I give my network marketing friends that have physical products is that, for your samples, you don't get volume. You only get volume for full-size products. So if you've got a full-size product that you can give samples to, give samples away. So like, if you got a lotion, if you host for my wine MLM people, if you host a wine tasting party, but the thing about it is you have to use that entire product for samples. So if you got a full-size product that you can divvy up among people, I don't care if you squirt lotion on 50 people, if you use that full-size product, that way you can write off the cost, which is what you paid for it, not the retail value, what you paid for it. So you can write off that cost, and you have to document it so you get the tax deduction and you get the volume for your network marketing company, okay? Use that tip. All right, number 4 is mileage, all right? So your mileage, when you're going to, if you're going to networking events, if you're, traveling and you're going to and from the airport, if you are delivering product, those miles are tax deductible. Again, your documentation is the key. The date from and to the customer, why you went there, to deliver product, and the amount of miles. And if you just go to one customer and come back, you get that round trip mileage. But if you're out making your rounds, then it's the total of the miles that you run for the day. So if you leave your house and you go to Jane's house and Sue's house and then comes back to your house, then it's that round trip mileage that is that's deductible. You don't get miles from to and from Jane's house and to and from Sue's house unless you do it on different days. Okay, so that's the mileage thing. And if you and if you do it right, when you're going out doing your errands and stuff, you can really maximize this. It's an efficiency thing, and you're also, like I said, able to maximize that deduction. So if you happen to have to go get some office supplies that's right from the store that's right next door to the grocery store, yeah, you, right? Okay, so that's number 4. Number 5, contract labor. All right, so contract labor, if you go on Fiverr, for instance, and you hire somebody to do graphics or whatever, right? There's a lots of stuff on Fiverr. If you hire someone to write a blog post for you, if you hire someone for video editing, if you are dealing with a specific person, then that is deductible under contract labor. Or even if you use a site like Upworks or Elance, or is Elance even still around? Totally an aside. But if you use a site like that, to hire independent contractors to do work for you, those that fee, that cost of labor is tax deductible to you. Now, if you're using someone in the United States and you pay them over $600 in the year, you do have to issue them a 1099. So if you have a VA that's in the United States, or a graphics person that's in the United States, and they are an independent contractor, and you pay them over $600, so number one, you need to collect a W-9, okay? And number two, if you pay them over $600, in 1 year, it doesn't have to be at a time, just an aggregate over a year, then you have to issue them a 1099, and the deadline for that is January 31st, okay? But if you have people overseas, you may or may not need to issue 1099s. It really just depends on the country that they're from. So get with your tax person. If you are unsure, get with your tax person, schedule a consult, and find out, okay? Because the last thing you want is some foreigner coming after you. That's just not cute. All right. Number 6, commission fees. Okay, so this is, so let's take Uber, for instance. So with Uber, they keep a certain percentage of whatever they pay you, right? This is what I've seen. At least I think that's how it works. I don't drive for Uber, I don't know, but I do believe they keep a certain portion of what they pay you. So what you have to do, and this goes for my e-commerce people as well, what you have to do is claim the total amount earned as your income, and then you deduct whatever part that Uber keeps or Amazon keeps or whatever as commissions or whatever kind of fees, okay? So that is completely deductible. And if you have affiliates, for instance, you have a product that you're selling and you have affiliates that sell for you, then you claim the total amount of income from the product, and then you deduct what you paid to affiliates as commission fees, okay? So my e-commerce people, and this is really key for my e-commerce people because I want you to get this right, because it really is a sticking point. So what Amazon or Shopify or whoever, what they pay you is not what you claim. You claim the total amount of your sales, your gross sales, and then whatever part that they keep, that is deductible as commission and fees, okay? So if you sell a $500 product and let's say Amazon keeps $30, then you would claim a $500 sale and then $30 as their fee, and then so that the rest would go to your income. So I hope that makes sense to you guys. All right, there we go. Number 7, gifts. All right, so gifts, it's, at the time of this recording, it's the holiday season. So gifts are tax deductible, gifts to your clients or potential clients. Now, you have a limit of $25 per year per person, and a husband and wife counts as one person. So it doesn't matter what, it doesn't matter what you spend. If you spend $1,000, you get to deduct 25, okay? So $25 per person per year, husband and wife counts as one person. Now, one of the ways around that is to give the gift of entertainment. So if you happen to buy, one of your clients' movie tickets, okay, you can deduct up to 50% of the movie tickets, and you need to do that this year because next year, that's not happening, okay? So yeah, you can do that for 2017. 2018, that's going away. But again, you need to document, okay? The documentation is key. You're going to hear me beat the documentation horse to death. You need to, write down who you gave it to, the total amount spent, and, what your deductible portion is, okay? So that's it for gifts. Number 8, home office. All right. So the part about the home office is this, is that you don't have to own a home to claim a home office deduction. If you rent a home, apartment, whatever, you can claim your home office deduction. The key is that you have to have a space that's dedicated to your home office. I don't care if you partition it off with, one of those dividers like that thing right there behind me. Whatever is going to separate your home office as your dedicated workspace, okay? And that percentage, of your total square footage, that is how much you can deduct. And so that also includes, utilities, any repairs related to your home office. So if you've got to paint your home office, then, that is a deductible expense. If you paint your whole house and your home office is included, then you deduct the percentage, okay? Now, one sticking point is that, a lot of people want to try to deduct their lawn care, okay, snow removal and lawn care. If you don't see customers at your home, then deducting lawn care and snow removal is not tax deductible for you. You have to be seeing your clients regularly in your home as a regular part of your business, okay? So I do, of course, y'all know me, I'm a tax professional, but I don't meet clients in my home. So even though I got a lawn dude, I can't deduct my lawn care because I don't see clients in my home. Okay, so boo hiss. All right, along with the home office deduction is office equipment. Okay, so if you had to buy a new desk, if you've got to buy a file cabinet, even if, let's say that even if you can't claim the home office deduction, but you can still deduct your office equipment. So like I said, if you got a file cabinet, what else? If you got to buy a desk, if, whatever you have to, a table, whatever you got to use as, office equipment, you can deduct that. Depending on what it is, it may have to be depreciated over a certain number of years, but it is deductible. Again, what? Documentation is key. All right. And number 10, tax prep and accounting fees. All right, so so with the tax reform, this may be something that's going away. I'm not exactly sure because they mentioned it for for individuals that they can't deduct their tax preparation fees if they itemize. That is no longer a deductible expense. But I'm really not sure with the language for business, okay? But nuts and bolts is your tax prep fees, bookkeeping fees, accounting fees. Those fees are tax deductible. And so that includes your software. So if you file your own taxes and you use, TurboTax or one of the other ones, then fine. If you pay for QuickBooks, whether it's desktop version, online, FreshBooks, Wave, whatever, I think Wave is free. But anyway, if you pay fees for bookkeeping software, that is tax deductible as well, okay? So you want to make sure that you go through and you make sure you deduct everything that you're entitled to deduct, okay? Having that documentation because, dude, it's the law. Take advantage of the law, right? Because you want to reduce that, you want to reduce your taxable income. Now, the one thing I will tell you is that for your home office deduction cannot create a loss. That means, let's say you show, $1,000 in profit before your home office deduction. If your home office deduction then makes you show a loss of $500, then you can't take the full home office deduction, but it can be carried forward for the next year. Okay, so you definitely want to make sure that you claim your home office expense because even if you can't use it this year, you might be able to use it for next year. Okay. And if you really want to be extra, take a picture of your home office every year and put it with your tax return because a picture is worth 1,000 words when the IRS is trying to say, this is not a home office. And you're like, psh, pet ale, right? Okay. So guys, that's it. Those are 10 overlooked tax deductions for home business owners. A lot of people don't know that these fees that they pay are tax deductible, and and how you need to account for things. That's the important thing. So what you get paid from, again, I use Amazon because I sell on Amazon, and they pay you a certain amount, once they deduct their fees and stuff, but you've got to, report your gross sales. And also, for third-party payers like Amazon, like PayPal, like Uber, or whatever, if you have over 200 transactions and $20,000, is 200 transactions and $20,000, they issue a 1099-K. That 1099-K shows the gross amount of your sales. They do not report what their fees are. So that's why it's important for you, when you're reporting, to make sure that you are reporting your gross sales, because that's what they're reporting to the IRS on your 1099-K. Okay. All right. So I think that is it. So guys, we're here. We're at the end of the year, right? We got 11 days until the end of the year. So take this time to go through, again, maximize those deductions. Start putting in the legwork now, because, at 12:30 on December 31st, 11:59, 59 seconds, once that clock turns, it's all over. All right, you guys, have a great day, and I will see you all next time. Bye.